Sanjeev Purohit is asking that what is the effect of SEBI circular regarding NAV on retail investor? What is the rationale for changing expense ratio very frequently as noted in my L&T mid-cap fund? And can't you show separate AUM for regular and direct option in value research site? Okay, the first question, these are three separate questions in a different context. SEBI has come out with a circular. So far it was possible that if your investment is up to rupees 2 lakh, you can deposit a check, and if your investment is made or registered or time stamped before 1 o'clock, which is the cutoff time today, you get today's evening NAV. So your 1 lakh rupee minus the stamp duty, that amount divided by today's NAV is the number of units allotted. Now the rule has changed, that this rule was applicable to all investments earlier as well, for investments of 2 lakh rupees and more. Now it has become applicable to all investments in mutual fund. So whatever be your size of investment, you will be allotted NAV only when the fund company has received the money. Earlier it was possible for investments up to 2 lakh rupees that they haven't received the money. They have received an application before 1 o'clock. You will get the allotment as of today at today's prices, and they will realize the price in 1 day or 2 days. They will bank the check and they will realize the money. That it actually affects in no way. It has no bearing on the digital investments or online investment, because the online investment mandates that the money is debited from your account and credited to the fund company's account that moment itself with a timestamp. So only in the case of physical checks where you're saying, and it has no bearing on all your ECS mandate and other things, because they are auto debited from your account based on an instruction and enablement from your bank. So it affects only the check which you used to write to a fund company and go with an application form for your investments. So that's one, and it's a fair system. You should get funds only after you have paid the money and the fund company has received it. You writing a check doesn't mean that fund company has received it, and it is fair to all other investors. So it's good. Second is why expenses vary or change often. Simply because expenses are variable. Recently, 2 years ago, not 2 years, little less than 2 years, SEBI made changes about the expense ratio. That as the fund gets, the principle is that as the fund gets bigger, it should charge lower expenses, and the economies of scale should translate into some advantage for investors. So for up to 500 crore, mutual funds, equity funds are allowed to charge up to 2.25%. Corresponding number for debt fund is 2%. 500 to 750 crore, it is 2%. So it goes down by 25 basis point, 1/4 of a percentage for amount up to 10,000 crore. And and after that, for every 5,000 crore added, fund companies are supposed to reduce by 0.05%. So as the fund gets bigger, in the denomination of 5,000 crore, expense go down. That apart, so that is for the equity fund, and the debt fund is relatively lower. It goes down to a lower of 1.25% and subsequently 5 basis point thereon for every 5,000 crore. Now there is an additional thing. Of course, over and above this, there is a GST which is levied, which is 18%. On top of it, mutual funds are being incentivized to sell mutual funds. They are allowed to charge extra a maximum of 30 basis point if they sell 30% of their incremental sales. So if the new money being mobilized by fund company is from below 30 companies, below 30 cities, which is mutual funds where the regulator wanted fund companies to go and sell mutual funds far and wide, not only in the bigger cities where mutual funds were sold. So earlier this used to be top 15 cities. The incentive was for mobilizing money from beyond 15 cities. Now it is for beyond 30 cities. So if a fund company is able to mobilize 30% of their incremental money, new money, from cities beyond the top 30 cities, they can charge a maximum of 30 basis points more. So all this mechanism of lower expense for more money managed translates into a variable expense. And this variable expense, and SEBI has also mandated that whenever the expenses change or go up, investors should be informed. So you are being informed of all the rise in expenses for you to keep you posted. you can take a decision and take a relative view that how are other funds, what is the cost of other funds as compared to the funds that you have invested in. And third question is, why don't we show the AUM of regular and direct options separately? Simply we don't get it. The disclosure is not independent, is not made separately for these two plans separately, so we can't.